The market has shown true resilience, or perhaps ignorance. We are standing at a point in time in which those investing may very well know how heated the market is, but simply going ahead full steam, pedal to the metal to maximize appreciation. The hope here is that the Fed will stimulate further if the market were to fall. Clearly, without saying it, they have supported the assets by devaluing the currency. Inflationary pressures have increased the wealth gap and will make it impossible for many to ever have a chance of recovery. You came here for the truth, so let me unveil that for you. Today we are going to get in depth with what's been happening with the average individual, with the store closures, how that leads to worse economic conditions despite the numbers they put in front of you, despite the fact that they tell you that the garbage fake unemployment rate at 8.4% is so fantastic, and we look into the data and it shows a completely different picture. I've got a lot of information. I'm going to get into everything. Let's begin. We are certainly in a bubble, strategist warns, but don't expect it to pop anytime soon. So I'm sure you know exactly what was happening back in 2019, leading up into 2020. The market is going up like crazy. And then, oh, wait a minute, we've got a big problem. The market fell down significantly, as you're aware, and you have seen basically the US market and others that have gone up and up and up throughout this period. But what has happened here is that there has been a massive surge, absolutely massive surge that has been going on, and we have watched this taking place while so many negative aspects of the economy have shown up. I've been covering this here a lot. You know what I'm talking about. That right there is never a good thing because you, number one, have a bunch of the stocks that are doing terribly. You have a small group of stocks that are doing very well, pulling the whole market up. But when you look at the actual economy itself, very different story. The expectation, as I said in the introduction, is that the Federal Reserve will simply be there to backstop any losses. That's not how it works, but they can believe whatever they want. UK house prices see the biggest jump since 2016 to hit fresh high, but it won't last long, say property experts. UK house prices grew by 5.2% in August compared with the same month last year. Month on month, the prices rose 1.6%. This is not good. I know a lot of people will think, wow, I've made more money. I own a property, it went up, therefore I'm more wealthy. And this is not the way that it should be looked at. Of course, this is inflation, and it shows up in different assets. It might show up in commercial real estate, not right now, that's for sure. It might show up in residential real estate. It might happen in equities. It might be in bonds. It might be in gold, and it might be in anything else. But we have to understand why that's happening, and we have to adjust accordingly. Most people, they see this as a boost to their bottom line, and that's it. They don't want to understand any more detail. They are completely ignorant to it. And I'm talking about people in the financial industry, not the average person. And that is truly unfortunate, because if we can start to dissect the entire system, not only are we more knowledgeable, but certainly we are more prepared. People are always asking me for the solutions, and the solutions are, number one, digging in. We got to have the knowledge. That's the first thing. Step number one, get the knowledge. Step number two is basically continue to stay up to date. If you don't have those two, it doesn't matter. I can't just give you one thing or the other, do this or that, oh, now you're fine. It's not going to work that way. It's like as if you're going through karate and you're trying to learn, I want to learn what the black belt does. I want to learn what the black belt does today, right now. I don't want to go through all the steps. I don't want to go through all the belts. Just give me the black belt stuff. No, you have to get the foundational principles first before you can go through building on top of all that. Singapore's economy could shrink 7.6% on year in the third quarter. That's according to the central bank. Okay, we're not talking about some analysts out there. This is what's happening in a country that is economically much better off than many of its peers, and anywhere really around the world. Is generally regarded as a very strong country, very good currency compared to the others, and yet their economy is taking a hit. We know what's been happening. We've seen this issue that's been taking place basically all over the world right now. This is yet another country that will not be able to grow on the pace that they were previously. This article here had some good details, things that I've brought up before certainly, but we're going to dig into it a little deeper. It's the tale of two recessions, also known as the K-shaped recovery. As rich Americans get richer, the bottom half struggles. The trend is on track to exacerbate dramatic wealth and income gaps in the US, where divides are already wider than any other nation in the G7. This is very important. Not only is it going to have an impact on those in the bottom 50%, but I would argue really within the bottom 80, maybe even the bottom 90. Everybody's getting pushed down. You might have been at a certain level at some point, but when you come through this cycle, largely what we have is a smaller and smaller middle class. The path toward economic recovery in the US has become sharply divided, with wealthier Americans earning and saving at record levels, while the poorest struggle to pay their bills and put food on the table. I think this is so unbelievable to think about that. When some people have so much and others have so little. Now, could that be with the top group? Maybe they were handed it, maybe they were given it at some point. Yes, absolutely. On the other end, could they have squandered it? Could they have lost it based on their own decisions? Yes, totally. But what we see today is a system that is built around and designed in order to allow the top people, those at the top of the pyramid, okay, to not only profit the most, but to take from everybody else. And they do this through the cycles. If people only understood this, we'd be a lot better off. Through these cycles, they can siphon away wealth from the public, and that allows them to maintain more control. It's not just about the money, because when you're at the top, I'm not talking about top 1%. I'm going into the decimals. They are able to exact more control over the public every single round. Sometimes it takes 5 years, sometimes it takes 10 years, sometimes the cycles are longer, but ultimately it is very clear, it is distinct. The globalist elite have more control now than they did before. The result is a splintered economic picture characterized by high highs. The stock market has hit a record level, and incongruous low lows. Nearly 30 million Americans are receiving unemployment benefits, and the jobless rate stands at 8.4%. And that dichotomy, economists fear, could obscure the need for an additional economic stimulus that most say is sorely needed. So basically, it's true, if they're looking at these statistics like the unemployment rate and that's moving down, well, how can they go out and justify more stimulus? Big problem, right? They get caught in their own lies, I guess. The trend is on track to exacerbate dramatic wealth and income gaps in the US. Spiraling inequality can also contribute to political and financial instability, fuel social unrest, and extend any economic recession. That is absolutely true. And of course, we're seeing that today. They can blame one issue or the other, but the underlying problems are there. Just a couple quick points, and then I'm going to move off this article. The disconnect between the stock market and the broader economy has been stark. On the same day that MGM Resorts announced it would be laying off a quarter of its workforce, throwing some 18,000 workers into unemployment, its stock price jumped more than 6%, reaching its highest closing price since the start of March. That's right. You kick people to the curb, your stock will go higher. The haves and the have-nots, there's always been a distinction. We are widening this in a way I don't think people have really wrapped their head around. That is completely true. I agree with it. Something that I've mentioned many times before. Down here is talking about unemployment, it's talking about the $600 per week. We are likely to see other macroeconomic numbers really fall off a cliff in the coming weeks. Of course, we know that this is a multi-stage approach throughout this period, and it's not going to be resolved simply the way that they suggest it will. I wanted to give you an update on what CoreSight has. These numbers here about the store closures, in my personal opinion, are only a fraction of what we are going to see. I was covering this all throughout last year. There was a record level of store closures. This year will absolutely surpass that. But at the beginning of the year, before the stock market started to decline, before they were willing to admit how bad things were getting, the openings were actually quite significant. I don't remember the numbers right now, but it was certainly in the multiple thousands. Let's say 2,000. The store closures were actually quite small. But remember, this is the announced closures. So we don't necessarily know how many stores had closed during this period. At the end of the year, everything gets tallied up. We get a more accurate number. But think about how many restaurants, how many small shops, the mom and pop shops, all of these other things that clearly they're closing up. There's no way that they could have stayed in business this long. There's not any foot traffic coming through. The numbers are massive. But this just gives you a little bit of insight. Anyway, 7,700 2020 year-to-date closures. Year-to-date openings, 3,300. Now, but remember, most of that was the announcements that were at the beginning, the very, very beginning of the year before all of this happened. So I think these numbers are actually going to be very different by the time we reach 2021 and we get the full data. But I wanted to bring it to you as it is right now. This article is talking about Canada, it's talking about Toronto, but largely I want to extend this to any area that experiences cold temperatures. Check this out. The person speaking here is the operator of a big chain of restaurants. Quote, if the next few months, this situation that we're experiencing here, 2020, does not go away or they don't find a solution or something, it's going to cripple the city for sure. It's going to get worse because come October, November, December, it gets cold. There's no traffic, people are not on the patios, and people are not walking around. This paragraph, they say that he's not the only one that had these concerns. Many of the businesses were shut down for weeks or months. Sales tanked. Others are on the brink of bankruptcy or closure. Depending on how the recovery goes, the Canadian Federation of Independent Businesses fear as many as 218,000 or 19% of small businesses in the country could close. Think about the devastation when you have 19% of the businesses closing down. You have to understand the ripple effect that could be had because of that. All of these businesses go down. Suddenly the ones next to it start to weaken. Maybe they do stay open, but they had 5 employees. You got to lay off 1. That's another person going out the door. They can't be afforded, and that's just the way it is. The organization says surveys it conducted have shown only 26% of small businesses are making normal sales, and 6 in 10 are concerned that consumer spending will remain low even after the situation is over. No one's buying much. Friends of mine own clothing stores, and the only things that are selling are casual clothing like jeans, running shoes, and t-shirts. No one's buying jackets, dress shirts, and dress shoes. Clearly, if everybody's working from home, if they don't have to go to meetings with clients and so on, they're not going to buy the fancier things that might have a bigger markup, that are more expensive. The businesses can't bring in that revenue that they did previously. That's why you're seeing Brooks Brothers, and I can't remember the name of the parent company of Moores and a bunch of others. That one also went bankrupt. Look at this. Bloor Street, for those who don't know, Bloor Street is where you find all of the top shops, all of the biggest names, the Rolex, everything else. That's what they reference here in this quote. My office is on Bloor Street, and already 40% of the stores on Bloor Street are closed. You know it's going to get worse. Let me remind you of what this is. All of the best businesses are here on this one street. You've got a lot of money on that street too. There are very nice areas, residential areas that are around there. A lot of people have money, and yet 40% of the stores are closed. This is just one city, but this is being experienced in many of them, not just in Toronto, in Canada, in North America, but all around the world. Wherever you are today, please let me know the situation, because it's not even. This might not be where you are, but I am noticing this in the news, as well as so many people telling me that from around the world. Please share your thoughts in the comments. New York City commercial property sales fall 54%, crush tax receipts. This is a situation that we expected. Obviously, you know what's been going on. That's why these two are very connected. We have people that are unable to pay their bills. We have businesses that are unable to pay their bills. The malls are decimated, but you might think to yourself, who cares? But there's a ripple effect. There's a domino effect. And if we start to simply take a few minutes looking at it, we're going to realize, oh no, that's not a good thing. The commercial mortgage-backed securities will spin out of control and will be a big problem going forward. That's all for this video. If you found it informative, hit that thumbs up button. I really appreciate it when you do that. If you want to check me out on Instagram and Twitter, new stuff every day, check it out at the Money GPS. If you want to learn how to sell stuff online, I'm talking about e-commerce. You can learn for free at the amazongps.com. Almost nobody actually takes action. If they would realize how much of a mistake it was to not begin earlier. Do you want to understand the financial system? Do you want to be able to ask the right questions? These two books will give you everything that you need to know. Check them out at the link in the description if you want the audiobook, themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? Probably not. Very few actually did. One of my worst performing videos in the last while. Definitely check it out. I'll see you there.